Welcome to Trading Lounge and the Australian report for the 8th of September. And this is the XMJ and the materials sector. And as you know, we've been counting this here because it's got a really nice clean count. I just want to use it as a bit of a template. So we know we've got 5 waves up here for wave 1 and ABC for wave 2 here. Then 1, 2, 3, 4, 5 for the third wave. Fourth wave, 1, 2, 3, 4, 5 here for the fifth wave. So we've got 5 waves up through here. And we've been looking for a, an ABC correction like this here. Now this is a little bit tricky to count here, but it's actually 1 and 2 and 3 and 4 and 5 here. So there's 5 waves here. It's a little bit tricky to see. So I'm going to go to the XMM, which is the top 300 metals and mining companies, and we'll see it just a little bit clearer there. So in this case here, we can, this is the XMM here. So we've got 1 and 2 here, and all the way down for 3, 4 and 5 here for the third wave, fourth wave and fifth wave. So it's quite clean to me that we've got this 5 wave structure to the downside. So what we're going to see is, and this will be with BHP and Rio and so on, is we'll see a corrective rally which has already started here that take us back to the 50-60% retracement level from the top to the bottom here, and then we will see another 5 waves down over this side. Now how far that takes us we'll see, because what I mean by that is that this will give us 3 waves to here, and that can be an A and a B and a C wave, and then we can move up from that point. But what we need to be mindful of, and this will be with all the markets, including banks actually, what we need to be mindful of is when this particular low here finishes, then we need to see, if it's going to be more bearish, we're going to see a corrective wave come in here for wave 4. So we'll see this 1 and 2 and 3 and 4 here, and then going down for 5. So this would make the markets, at this point, this would make the markets bearish at this point. So what we need to see after this 3 wave move here, then we, instead of seeing 3 waves up, we need to see 5 waves up, right? If we see 5 waves up, then we know we're going to have a bullish market, and because we get 5 waves up, that means we're going to get another 5, and we'll see the fractals, because that 5-wave structure is a fractal. We'll just see that fractal building upon itself like this is here. That's a fractal, that's 5 waves, that's a fractal, that's a fractal, and this one here, this bigger one, that makes it a fractal as well. So I like to move, I can put targets way out, yonder and so on, but I like to stay with the evidence. And the evidence here is that we have 5 here, we're going to get 3 here, and that means we're going to see a rally in the banks, and we're going to see a rally in the material sector and so on. So 5, 3 and 5. So it's only at this point here that we'll know what's what. And we'll just need to be patient, and we'll just see this, observe this here. Now, so this will, like I mentioned, this will reflect back to the banks as well. So if I take CBA here just as an example, from the same top, it's moved down through here. So it's a little bit of a strange count, this one coming down through here. However, I'll just stay with it for the time being. But we should see a rally from this space here. We should see a rally move higher here. Now we could count this in 3 waves down here to this point, which makes it a little bit different at this point. So 5 waves down to this point, because we counted 5 down to here, and then a little rally, then 1 and 2 and 3 and 4 and 5 in 3 waves here, because this is a little bit like the XJO actually. So if I go to the XJO here, so first of all here is that the actual, all these look very close here, but on this particular chart, and this is data that I buy, so it's managed, but this is the actual top here, this is the highest price here. And in this case here, it does, this one here certainly got a different move down. It's very much more like a three-wave structure, isn't it? Of course, what we could also see here as well, and what I was kind of expecting, is to see a three-wave rally to take us back to the 61.8% mark, and on our CFD platform, it's just above the 6,000. I should just take that up a little bit there. When I say 61.8%, that's from that high down to that low there. If I took it from this high here, well, there's no point, because I need to take it in the last leg here. But there is a point, I guess, from that high to that low here, because we could end up seeing, just to make things a bit more complicated here, we could actually see some sort of triangle pattern emerging from all of this as well, because we've got three waves here so far, but I don't know that yet. So, but what I was thinking is that obviously the 6,000 is the important point through here. The market has made a new high just, and it's coming back down, and it's sort of playing with this 6,000 here. And really what we need to figure out is if it's going to reject the 6,000 or if it's going to accept it. So rejection would look like this. We would see another retest in there that would probably come down into there somewhere. So we'd see that sort of retest again at that point, and reject it at that point. Otherwise, we'll look at some sort of support sitting on this level here, and then if that's the case, then we'll need to look at long trades on that side. So really, just to make things simple, the 6,000 here is still the line in the sand. It's just that we made a new high and it's rolling over now. So we need to see if it's going to, it'll retest that 6,000, and then we need to see if it's going to drop from that point. Now the move down through here, when I counted on the ASX here, this is 100 ticks here, that's the top that I was just talking about. So we counted 5 waves down through here, and this wave 4 here was a little bit dodgy, but at the end, because it overlapped wave 1, but at the end of the day it was the best fit and the right thing to do. This move here counts as an A and a B and 5 waves, 1, 2, 3, 4, and then 1, 2, 3, 4, and 5 here for the B wave here. So what I've just done here, I've looked at this as 1 and 2, and all of this is the third wave here, fourth wave and fifth wave, which I've really taken from the cash market, because if I took it from this market, I could count it a little bit differently. Now from the low here, we're looking at this move to the upside here, the A wave, the B wave here, and there's a different way to count that as well. We can also count this as an A wave. No, yeah, you can do, because it overlaps here. We can put this as an A wave here and the B wave over here. So an A wave here, then an A and a B and a C wave here. That would probably fit as well. Not that it matters. We still end up with a B wave here, okay? So I won't go into that. So this little move to the upside here, it appears we've got 1 and 2 and 3 here. And probably wave 4 should go back over to this space here. I'll just need to pull that apart a little bit, and this would make this wave 1 and 2 in here somewhere, and 3 and 4 and 5 coming up into that 6,000 area here. So that's the 61.8% at 6,015 roughly, and but obviously the 6,000 is what it's about. This other box here is the is right from the high over this way up here from the top, so that makes that the 61.8%. That's not really important unless we come up into that space, and it would be important because then we would need to be looking at either looking at a triangle pattern that coming into that space, but if it found support on 6,000, we would likely push up to 6,100 at that point. So we just need to see how this is going to finish off here as 1 and 2 and anyway, 3, 4, 5 up into this space. In a nutshell, the market will move up here. We need to see if it's going to become support or resistance on that 6,000 at that point. So, yeah. I mean, it would be good to take it from over here in terms of 1, 2, 3, 4, 5 for wave 1 here, and then an A and a B and a C here for wave 2, and then look at this as wave 3, 4, and 5 as 5 waves down. But I can't count it like that because that's the high, and this is create overlapping wave structures over here. So I think I'm on the right track. I just don't know what I've got here. So I've got it as an A and a B and a C wave here, but it can be counted in so many different ways. This can also be wave 1 coming down to this point here, or we could also look at this here, excuse me, as copy that as not that one, this one here. Actually, what I should do is just, I will copy that, but I'll use that one, copy that, and make that one larger degree here as an A wave here. I know this is not really helpful, but we're in a corrective pattern, and I'm not sure how it's going to play out here. When I say that I'm not sure how it's going to play out, I'm quite okay with, when we looked at, if we come back to the XMJ here and the metals and mining, we know that this here is 1 and 2 and 3 and 4 and 5. So we know we got 5 waves here. So that means that, we're going to get a correction here. So in a way, we kind of got to follow this here a bit. That's what we're going to be looking at. And I know the market can look bullish as well. So a stock that's bullish would still be FMG. So let's just take a look at FMG here, and I'll just try and do the count here a little bit with us. I won't label it, but we can look at it in terms of this move up here. We can look at wave 1 here with an A and a B and a C wave here, right? Now this next move up is 1 and 2 and 3 and 4 and 5 here. So this would be 1 and 2 here, and then the next smaller degree would be 5 waves of wave 1 here, 2 here, 3 here, 4 here, and going up for 5 here. So really would be looking at all of this here as a wave 4 pullback here. So from this low here to this high here, we would, not that it has to pull back to the 38.2% retracement level, but we do need to see some sort of corrective move in here, and I just think this is the first leg here. But what I'm just pointing out here, this market has still got further to push to the upside here, and will play out across the 20 here. In fact, it's across the minor level here at the moment at 18. Now the other point, when I roll it in here further, then we see all of this here as well, right? All of this pattern. So this is a wave 1 here, and this is all of a corrective pattern in this particular space here. Then this is wave 1 again and 2 here. So all of this, if I just take it just to show you how sort of bullish it is that we would need to look at all of this as wave 1 and 2 here over all of this period of time here. And this would make all of this here, I can count 5 waves to this point, and the correction here be 5 waves in this point, and the come back here. So this would be 1 and 2 here. This would also be 1 and 2 here. This would also be 1 and 2 here, a smaller degree, and this would all be the third wave here. So once it gets above the 20 here, then we'd see a correction back here at the 20, and then we would see a push up again here. So in quite a few, so it's still unfolding. So from there's still lots of 4th and 5th waves to play out here. So this is really quite bullish here. So when we come back to look at BHP, if I can just bring BHP back in here, for example. This is BHP. So I'll just get more in here. This is all of it here. So this is from this high here to this low here. This is a corrective wave here as an ABC pattern. And I think that we've already got our 5 waves up here. And also too is that this move, this top here to here, this is a second low here. So this can also be counted as an A and a B and a C wave here, pulling back. Well, that would be pulling back pretty close to the 61.8% here in this case. So from this low here to this high here comes in here. So we'd probably need to look at this as wave 1 and back for wave 2 here. But that would also mean too that this move here that we're looking at, that we've been counting from the COVID correction, is we've been counting 5 waves up here too. So we've been looking at as 1 and 2 and 3 and 4 and 5 here for wave 1 here. I could go an A and a B and a C here for wave 2, but it's just because this appears to be in 5 waves here, I've gone it that way. So I've gone an A and a B and a C here for this, and then I've got 5 waves up here for wave 3, 4 and 5, and I'm thinking that this pattern that we've been looking at here is 5 waves down here basically as some sort of correction that's going to play out here, and then we're going to see another 5 waves to the upside coming into play. You know, it's also when I look at the on the banking sector again, I hope you don't mind me rabbiting on here a bit, but this is CBA here, and with CBA we can count 5 waves up here. So I'm thinking that, you know, we pull back to the 65 level, which is roughly the 61.8%. We'll just double check this. We'll just stay with me a second here. CBA is pretty much the bullish one out of them. 62 it is here. There's a medium level in here, 65, so that will come into play here. So I think that once this pulls back in here, we'll start looking for impulse waves to the upside, but I think it creates a buying opportunity in here. And I know that the other banks are not, the other banks have actually just got 3 waves up, so we'll need to look at those. Let's just look at ANZ, because ANZ is a little bit different because it's got interests in other countries and so on. But I really find this interesting here. I mean, normally I just look at this as an A wave, a B wave, and a C wave to the top here. But the trouble with looking at this is that it still could be an ABC pattern here, but then this would make all of the A wave here, then back for the B wave here. This is really reluctant to go any further down, and then we're going to go up. So we could be looking at this as an A and a B and then 5 waves up for the C wave. But then that makes the rally too high from the top up here. So the only thing that this could be here is a wave 4. So as a wave 4, if I take it from this top here, we'll be looking for 38.2% retracement level, but it's already moved up to the 50% area, which is okay for a market that's pulled way down and looking for it to do the 38, 40%, and it goes to 50%. It's not such a big deal at that point, so I'm not worried too much about that. But what makes me think that it's bullish is because of this particular pattern here. It's not impulsive to the downside, and this also looks impulsive here as well, and corrective here. So this pattern here is a bit like this pattern here, just a smaller version of it. So we should really be looking to go long above these, well, certainly above these highs. We could probably even bring it down further into this space here, but we can't do that until we know that the market's pushing up here. But just be mindful that this is ANZ, and WBC would be the same, and other banks would be the same as well. If they've got this high here, if that gets breached here, then that means that this high is going to be breached. So that means we'll be pushing up much higher at that point. Okay, so that bullish pattern, starting with FMG and then looking at BHP in the bigger picture, and then the banks here, there is space for this to move up, and it's a little bit like the banks in the US as well. They've also got this same pattern here. Can I just find? Let me just find Goldman's for a second. See if I can do that for a second. Just bear with me a second. Let me find it. Let me just. So this is Goldman Sachs on a 4-hour chart, and this is the COVID correction coming down into this particular space here. And I can count 1, 2, 3, 4, and obviously 5 waves up through here. And then I'll look at this as an A wave, a B wave, and a C wave here. And then I was also looking at this. This could be counted corrective or impulsive. I know that, and the same with this one here as well. But this one here was starting to look impulsive. So I talked about going long at this point and leaving a stop under here, and that sort of clicked in and is looking quite good now, but it's sitting on this level here. It's got 5 waves up. It's done an ABC pattern here, and that means that that wave 2 can go into that place here. And I know that the US said that they weren't going to buy any bonds as such, but they'll want to push the yield. They want to push the yield up to 2%. So they have to buy bonds to do that. And if they're going to buy bonds to do that, well, then that's going to be all good for the banks if they want to push that yield curve up to 2%. So I think that they will come in, and at some point they said they won't. But that's the only way that they can. They haven't been able to push it up to 2%, so they'll have to come in and buy bonds, and that's going to be good for the banks. And I think this is a reflection of it. And obviously, when Australia borrows money on the open market, they will be pulling it through the same channels. That's why Australia is actually a Australia is an LLC company. That's what Australia is, and they had to make it a company, and it's actually registered on the New York Stock Exchange. It's not traded, but it's registered there. So American investors, because Australia is actually a company and it's regulated, they can invest money into it. So that connection is there. That's all I'm trying to say. Anyway, enough waffling on. Thanks for tuning in. Cheers.